So that's why Ethereum probably could go to 10,000 or something. If the world suddenly realizes we're going to tokenize more things, and like these tokenized assets like equities, what should the blockchain be valued at? So then suddenly ETH should maybe be worth a lot more money. Now, I like the Bitcoin Treasury model. MicroStrategy is really the blue chip of that. But what makes MicroStrategy attractive is that he's accumulated enough Bitcoin. He's accumulated almost 600,000. That is so much Bitcoin that he has what I call a sovereign put. The reason Ethereum is attractive, in my opinion, is that real world assets are becoming tokenized. Now, the ETH Treasury models, there's a bit of an advantage of a Ethereum Treasury company if you directly compared it to a Bitcoin Treasury. Following MicroStrategy's model of trying to earn more crypto per share, well, Ethereum's volatility actually makes it cheaper.
Today, as crypto investors continue to speculate as to whether we'll see a price drop in Bitcoin and Ethereum in the coming weeks, this crypto cycle is heating up. And Tom Lee remains bullish, with a parabolic rise in the last few months of 2025. Forced selling, leveraged bets, and the usual tug of war we see when an asset approaches such a huge barrier. The bigger picture looks very different though. Analysts are drawing a striking parallel. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors who see its role extending far beyond speculation. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. Bitcoin's price sits just over $112,000, still down over 4% in the past week. The community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. And as Tom Lee points out, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
If the US government ever wants to create a Bitcoin reserve, well, they can either try to buy 1 million Bitcoin in the open market, or they'll buy MicroStrategy at a huge premium. So because of the volatility of Bitcoin, MicroStrategy in turn can use the capital markets to raise money at much reduced cost. Like if he held Bitcoin, it'd be very expensive for him to borrow money to buy more Bitcoin. So if you own MicroStrategy, he's working to give you more Bitcoin per share every day, and actually at a efficient cost. So over time, you're owning more Bitcoin, so you benefit from the Bitcoin going up, plus he's getting you more Bitcoin per share. The reason Ethereum, is attractive, in my opinion, is that real world assets are becoming tokenized. And we know that at least most of the real world assets have been tokenized. But the big mega trend in the past year, the real viral app and maybe what I call the ChatGPT moment for crypto has been stablecoins. It's been enormously popular with consumers and with merchants and now banks. It's a good business model for banks, but it's a great deal for consumers because it's a lower way to actually pay for things, and it's secure because it's a blockchain. One is that there is a yield you can earn on Ethereum by staking. So you actually can grow your Ethereum per share from that income activity. The second is that Ethereum's delivered volatility, so it's a measure of how much it moves, is actually twice that of Bitcoin. So in theory, if someone had looked at it as like a capital markets access, like following MicroStrategy's model of trying to earn more crypto per share, well, Ethereum's volatility actually makes it cheaper to fund purchases. So because the higher the volatility you have, the more you can sell volatility and then lower your cost of borrowing. And the third is, of course, that because it's a staking token, a treasury company actually can also act as an operating business on the network itself. And that's important because that ties back to something I'm originally thinking about, which is that as more things in the financial world and real world become tokenized, then financial institutions like Goldman and JP Morgan and Amazon Walmart, as they do stablecoins, are also going to want to stake Ethereum itself. So we're essentially doing the underlying architecture of what other businesses will actually do. So we're essentially getting in front of what other businesses will do. So to me, Ethereum might have actually languished and lacked innovation for some period of time. And that's really what the fact that Ethereum sort of hadn't moved much. But I think that the fact that there's now tokenization taking place of real financial assets, and you saw with Robinhood, the idea that they're going to be tokenizing a lot of things, including private companies. I think that there is going to be a real look back at the layer one networks that offer a lot of utility with smart contract, but they're secure because they're actually US based, or a lot of the validation takes place in the US. And so that's why I think Ethereum really stands to benefit. I know that there are other chains that have a lot of stablecoins, such as Tron, but one of the challenges, of course, is that that a lot of the activity on that takes outside the purview of the U.S. There was a date where, there was a registration statement effective, and then someone had written, I think the crypto world is not really used to SEC filing, so then they see this registration statement, and then someone like Rostar, oh, everyone's dumping their shares. And I think in crypto, that's common because they would call that a rug pull. They're like, oh, there's a rug pull about to happen. And but I think that's you're right. Over time, people learn different behaviors. I mean, I would say the most successful crypto traders actually are quite gifted, and they actually do quite well trading equities. But the thing is, in the equity world, there's been a lot more value created by not trading. You really should learn to be patient. The biggest, most recent lesson is what happened from February to April. This year, we had a black swan with tariffs.
Yeah.
I mean, it caught everybody off sides and off guard, and we had basically a mass liquidation of the stock market, waterfall decline. And we gave very unpopular advice to our fund strat clients, which is don't do anything because it's going to be a V-shaped recovery. We said every waterfall decline is a symmetric bounce.
Yeah.
And we had so many people saying, yeah, it might have worked in 2022, it might have worked in 2020, but it's not going to work this time because the Fed's not behind your back. And we said it won't matter. And so a lot of people liquidated, but guess what? We had a V-shaped bounce. But Circle, which has been a very successful IPO, and it's been the most successful IPO in the last few years, and it's crypto. I mean, crypto has been one of the best equities and now the best IPOs. But stablecoins really operate off a layer one. So, a lot of Circle operates off Ethereum. And if you look at the tech stack, typically, the more you get into that layer one sort of level, the higher the multiple should be for the business because it actually benefits from the multiple applications sitting on top of it.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
Ethereum should have a staking yield. The yield should, if the enterprise, Ethereum should have a much higher multiple. And so
Why?
I asked that to Sean Farrell. He said, if you do the rough math, you get Ethereum would be very undervalued if you were looking at Circle relative to layer one. I think there's two things to keep in mind. One, there's plenty of precedent for treasury companies in the historical stock market world, whether it's master limited partnerships, but it's also like the energy industry, like a commodity industry. So that means in the market dictionary, if equity investors believe a treasury company has the right management team in place and the right capabilities to raise and grow the value of the crypto held per share to go up, it should always trade at a premium to its net asset value. That's what MicroStrategy has proven. Mm-hmm. But if someone's just saying, I'm going to put Bitcoin on my balance sheet, I should get my stock price go up, that's never going to work, because that doesn't create that ability and the attractiveness, which I described earlier about why treasury companies are attractive. Can they lower their cost of financing to grow their coin holdings per share? And if they can't, it should trade at NAV. So I think the bifurcation you're highlighting is the market's conclusion that not everyone's going to be able to achieve that.
That's Bitcoin and Ethereum, and seasonally strong. I think they could make a monster move in the next 3 months, like huge. And the third, of course, is interest rate sensitives. That's really small caps and financials, but really the first two might be the standout trades. Bitcoin is particularly monetary policy liquidity sensitive. Ethereum has elements of being sensitive to liquidity, but it's also part of this AI moving onto the blockchain and Wall Street moving onto the blockchain and that whole stablecoin ChatGPT moment for crypto. So Ethereum, I think, trades almost like 1971 Wall Street, which was the dollar went off the gold standard, a lot of innovation. Ethereum essentially is a growth protocol, and that's why Bitmine is so aggressively acquiring Ethereum. This is still mid-cycle for the bull market as well. I think some parts are later cycle, like part of the Mag 7 trade, but I think the next leg of this is really the Fed cutting, helps the ISM get back above 50, and then I think, financials I think are still important because I think that they're going to re-rate more like technology stocks. Goldman and JP Morgan are basically technology companies now, and as they embrace the blockchain, they're going to become more streamlined and less employee dependent, much more AI driven. So I think there's a lot to look forward to. I think it's really important for CEOs to be confident the Fed is cutting, because we know the labor market has slowed, maybe even wobbling. And that's because businesses are cautious, and the ISM reflects it. It's been 31 months below 50. The Fed can actually re-inject confidence by saying we're back into an easing cycle. That helps businesses get confident and expand again. So there's a lot of legs to this if the Fed cuts, and I think it'll be a real improvement in liquidity. So I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause, and they cut in September. The number one trade is NASDAQ 100. So I think that's why the Mag 7 and the AI trade gets a lot of liftoff. The second is monetary liquidity sensitivity, global central banks easing. But I do think AI still has many years to just propel earnings surprise and innovation and economic growth. So I don't think it's late, it's too late. It's not too late to buy the Mag 7.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology, and if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.